Hey, and welcome to Alpha One. In this video, we are going to just talk about what Forex is. Forex is basically a market between different type of currencies. Like for example, if you have dollar, American dollar against the Japanese yen, for example, then the value comparison between them makes the Forex market. So we can open that one, for example. So then you can see here is what you need to pay in yen to get a dollar. So today you need to pay $126-ish for a dollar. And then you can go into, and if you think the Japanese yen will lose value compared with dollar, or if it will gain value. So that's basically what Forex is. Hey, and welcome to Alpha One. So in this video, we're going to talk about something super basic, but still is something we need to go through. That's candlestick. Candlestick is basically this you see here. You have this green one and you have the red one. You can basically choose the colors you feel it's best for you, but I always like the green and red. Red means the market is going down and green means the market is going up. So candlestick is basically showing you the entry when the market did enter the trade and when it's closing. And then you can see you have, for example, on this one here, now this long one here, you can see you have a line there. That means the market did go up to this value, but did close in that value. So show you basically total movement, but the green full base head, what we call candlestick, is showing the opening of the market that was there. And you can see it got down a little, but it opened there, right? So always will show the opening place. So for example, on this one here, you can see clearly it opened there and it go all the way down to here, but it closed there. So show you the opening and close, and then fill it up with a color so you easily can see the market movements. So for example, with this one here you can see the market did go all the way up here, but it opened there, did go a little down, and did close there. So you can see very little movement, but it's a way so you very easily can identify how the market is moving. Because if you do not have this, it would be very difficult for you to see how the market is moving. And then you have the possibility to, for example, make trend lines and things like this that you will see later on my videos. So that's candlesticks for you. And also another thing, this change also, you have the possibility to change the candlestick. Like this is on 1 hour. We can change it for example, 15 minutes. Then you get an opening and close on 15 minutes. So then the candlestick will show the opening for each 50 minutes and the closing for each minute. So that's basically how candlesticks works. It's for a tool for you basically, so you easily can see how the market is working. So you easily can see, for example, like here, you can clearly see up here that you have a support area. And you see, for example, when you broke down from the support, when you come to retest, you did not manage the first time, but you broke through it. And then you can see once again, this become a support area. So also that you have the possibility to easily to see places where the market have difficult to break through, either down or up. So with that, that's candlestick for you. Have a perfect day. Hey, and welcome. So what is PIP in Forex trading? PIP is basically a measurement to express the different type of values. So it's more like when you are you have a meter, right? That's a measurement. In Forex, you have PIP. So it's a little different from currency to currency. So for example, for euro against dollar, is the measurement for each 0.00001 difference. So in this case, you can see now in the end you have 38, 39, 42. So when this go from 30 to 40, from 40 to 50, that's 1 pip, okay? But if we, for example, open, let's open USD, GPY, here the difference is from the number you see, let's see, this one there, you see 0.8. So when for each one number this one go up, that's 1 pip, okay? So it's basically a measurement, so you can say how much movement you have done in a trade in minus or plus, for example. So you can say I managed 10 pips, then that's the value, that's the difference, that's more like the measurement, okay? So that's pip for you in Forex. Hey, in this video we are going to talk about leverage. Leverage is basically a way you can multiply your money so you can play with more money, more or less. So let's say, for example, you enter a Forex market. You have $1,000 that you put into the broker and you put a leverage 1-to-1. Then you only are trading with your own $1,000. So then if the market just go up a little, you earn just based on your $1,000. But if you enter with a 500 leverage, then it's like you have 500,000 from the 1,000. So it's 500 times, right? So that's 500,000. So then it's basically like you have $500,000 that you put into the Forex account and you're trading with that. That means when the market just go up a little, you earn so much more, right? But the problem with leverage is that also if the market go against you, and let's say you have $1,000 and the market go against you, value of $1,000, that means the broker will close your trade and remove that money from your account. But if you have a 1-to-1 trade, then you don't have that risk, because then it's all your money all the way along. You're not borrowing money. So it's basically leverage is like you're borrowing X times of your money. So that's basically leverage. Hey, and welcome to Alpha One. In this video, we're going to talk about what is a broker and what is spread. A broker is basically a financial service company that is providing trades from currency basis. So for example, if you want to enter a trade with dollar against Japanese yen, you need a broker to do that for you. So you can easily online go in and do a buy trade like you can see you can do here. So that's a broker. And a difference between a good and bad broker can be the difference between you making money or losing money. And that go into, for example, the spreads. Spreads, that's basically the difference between buyers and sellers. If that difference is big, you can enter a trade and the trade will be much in minus. So like, let's say, for example, you enter a trade here now. Do you see this line you see here now? You have one blue line and you have one red line. They would have a difference. So that means when you enter the trade here, you maybe have entered the trade down there. And that's not good if that's a sell trade, for example. Because if you enter a sell trade here, that means you need to go all the way down here before you start to see profit. So that's why you need a good broker, like you can see here now. If you take a look, for example, at the most famous one, euro against dollar, you see most of the time says 0. That means it's no different between buyers and sellers. And that means the area when you go in with a trade, your trade are in 0. So if you go a little up, you're in plus. If you go a little down, you are in minus. Or if you're going with a short trade, short means you're selling. That means the price, if you go down, you're in profit right away. So you need always to have a good broker if you're going to make money. Of course, if you are trading, day trading, if you are trading from day to day, you are more long-term trader. Yes, of course. Then any broker can work for you. Swing trader, any broker can work for you. But if you are a scalper, that you're scalping the market, you need a good broker. By the way, it's always good to have a good broker because you never want to have left money on the table. Because if you're doing many trades through a year, even as a scalper, if you have a bad broker, you will lose so much money through the year compared with a good broker. So that's basically spread and broker for you. Below the video you'll find a link to a good broker. Hey, and welcome to Alpha One. In this video we are going to talk about Stochastic, how you can trade with it and how you can improve your win rate using it. So first let's add that to the chart. So here we have Stochastic. That basically will show you oversold and overbought areas. So for example, here now, if you just follow Stochastic, he will not tell you to go short. And that is actually right now a good choice, because you can see here now that we are in a resistant area, because it's the area that they hit many times. So this time around, this could be correct. But then if you take a look here, for example, here you are all the time down here in a oversold area. But you can see, if your hair had go long here, you will very easily see that you will have lost on that trade. So how we can improve this strategy? And with most of the strategies is to add Bollinger Band. Bollinger Band, see? And then you just add this one you see there. Let's put a star on it so you see it easier. That one there. We choose that one. Then you can more easily identify fave market, because here you can see we will not enter here. The way we work with the Bollinger Band is that we wait till you get one green bar that go in again. That will be our entry. Still you can see we did go a little more down, but in the end would end out quite good with this trade. So now typically we like to trade on 30 minutes using this strategy. So now let's take some few examples on where to enter and how we do it. So we can start from back here. Here you can see we easily did go in a oversold area. We did then get one bar there. So the way I would have done that is to add a long position right there. Take a stop loss right below the start of the trend, and take 1.5 up. And now it's 1.6, and you can see we already have won that trade. Then we take, for example, up here, same thing there. We did go out of the Bollinger Band. We are high in the Stochastic. We take a short trade. Let's see if we have won that trade. We enter on this bar there. Let's move this one out of the way. The stop loss don't need to be so much. We set it there. We take 1.5. That you can see would be a losing trade. This one did hit stop loss. So then let's go for the next. You can see here now, let's close this one. No, we are not going to do that. So now you can see here, we are high in Stochastic, but you can see up here, we are not out of the Bollinger Band yet, so we are waiting for that. But here you clearly can see we did go out of the Bollinger Band. Then, like I said, we are still high in Stochastic. We then enter on that trade there. That will be a short again. So then we enter with a short position. We set the stop loss a little above the start and 1.5, and that is a winning trade, as you can see now. So that was a winning trade. Now, same happening here. We are now low in Stochastic. That means we are looking for a long trade. You can see here we did go out of the Bollinger Band. We did re-enter. Let's now add a long position on this one here. And it's a clearly also a winning trade. Let's just make it correctly there. And even with 2, we have a winning trade. So that's the thing. When you do like this, you have, that means for every $1 you have a losing trade, you earn 1.5 on a winning trade. And from these 4 examples you see here, we have 3 winners, 1 loser. So let's say we lose $1 and we make $4.5. That means we have $3.5 profit if you had only $1 on losing and $1.5 on winning, just to make it simple. So you can see here on these 4 examples, it's clearly a good strategy just by using 2 different type of indicators together. So I have learned that most of the strategies become good if you use more indicators together. So Bollinger Band is a one that fits very good with RSI, fits with MACD, fits with anything, just to more, you get more like confirmation. So that means, for example, if you have a trendy market, for example here, if you had entered, for example, a short position right away here, for example, you can clearly see you would have lost. But as you had the Bollinger Band together, you would not have entered the trade yet. You will have waited all the way up there and you would have a winning trade instead. That's why it's good. But Bollinger Band is not good by itself. That's why you need other indicators to work together with it. So now let's go back. Here is another clear indicator on that. But here, for example, we would have got a losing trade on this one. We would get a losing trade there. And we would get one here. So you can see you can get some losing trades. But here we would get a winner, right? So this one winner would then basically almost recover the 2 losing trades. So the win rate on this, it's around 52% if you take 100 trades with it. So it's not the best strategy, but it's a profitable strategy and it's easy to follow. You don't need to teach your eyes nothing. It's just to follow and do, follow and do. So that's Stochastic for you. It's not the best one, but it's easy. Through my videos, you will see many very good strategies. This is not one of the best, but still it's one you can make money with today. Also below the video, you will find a broker that is amazing, that have a very tight spread, and spread is super important in Forex. That can be the difference between a winning strategy to a losing strategy. If the broker have too much spreads, does not help you have a good win rate if you are losing on every single trade before you even entered. So choose the broker I have below the video. That's the best one you can have. So with that, to the next one. Hey and welcome. In this video, I will teach you how you can trade with Bollinger Band together with RSI. So first of all, let's add these 2 indicators. To add indicators, you basically, this is in trading view by the way, you just push indicators you see there. So let's do that. And this is completely free to use. So I always prefer to use trading view because it's much easier, much faster, and it's a nice way to look instead of use MetaTrader. So let's add Bollinger Band. Bollinger Band. We are just going to have the normal Bollinger Band, nothing special. And then we add RSI. Let's see. We just want the normal RSI also. And that's this one you see here. That says updated. So let's push that one. And there we have it. Okay. So basically what we are looking for. This we can trade on lower time frames. So let's take a look at 30 minutes. So then we can see here now that with the RSI says that it's a trade, it's a bow, because basically the way RSI, it shows you when it's overbought and oversold. Okay, so oversold is when it's below 30 and overbought when it's above 70. But Bollinger Band can give you a small idea about the trend change in the market. So, but I will teach you a few ways you can be trading. So it will be the same like the trend trading I show you, so you can follow the trend and then also be waiting for the trend change, like we did also with the trend line, if you did see that video. So first of all, let's take the first option. It's a very good indication when the RSI cross the middle line, and you can see that that happened also with the Bollinger Band. Then when that happens, let's zoom in a little in that area. Let's go, let's zoom in. And now this is more scalp trading. So to scalp trade, you need a good broker. You find a broker below the video that the difference between buyers and sellers are very tight and need to be that. So now let's see. We now can add a buy sell right away. We cross the line. You can see we did it here with RSI, but let's wait till we do the same with the Bollinger Band. Okay, and then you also cross the 50 line. That's a very good indication for so you cross first this one here, you wait, you cross this one here in the Bollinger Band, and you cross the 50 line. Then it's a very good indication that we have a trendy market that will go up. So then we enter here, we take very tight stop loss. We take on the last we can see before we did go crossing this line there, we set right below the last more like this line that go in the candlestick there, right below it. And then we can take like 3 times, because we can get some losers, so it's better we take 3. This would be a winner, so it's 3.5 there, but it's okay, it's a winner if we go a little more there. Okay, so then basically every time we then come close to the middle line, so you can see yet again there, you enter with a trade and would be clearly be a winner again. And you get close here, don't need to touch, close is good enough. We're getting close there, we go again and set the stop loss just right below. Actually you can set it right below this brown line also, that can work also. So it's no confusion. So you can do that here also actually. Just put the stop loss a little below the line. It's easier for you to maybe trade like that. The first losing trade would be here. We would enter again here, but that would be a loss, because here you can see the change. But then yet again, you come over here. Let's go down to the RSI first. You can see in this region here, we cross both the yellow line and the 50 line to go up, and you go up to here. You see we do the same in not in this bar but in this bar. So we would enter a trade on a long position right here. We set a stop loss right below the brown line, and let's take 3 times up, and it's a take profit again. And then, but then you need to understand, when we have a loser, we lose 1 time, but when we win 3 times. So that's why this is powerful. So then yet again here you can see this one would actually be a loser. We come down to the brown line again and we lose, but does not matter because we got a 3 times winner there. So that's how we ended. That's how we are going to trade. Now let's see if we can find another direction. So now we are trading the another way. You can see here now we have crossed down for the brown line. We are touching here, but we have crossed the yellow line here, but we are still not crossed the 50 line. So we wait. Here we crossed, right here we crossed the 50 line. That means we will now go for short trade. So then we go here, we go back here. You see we crossed there. Let me see. Yeah. So we enter with a short trade here. We set stop loss right, let's see, right above the brown line. We do 3 times, more or less there we are 3 times, and it's a take profit. Then we need to wait. We need to wait. You see we did never come and retouch this line. So, but here we see that we cross it. Then we need to wait till we come back to it again. Okay, and you see that here we did cross the 50 line. So we need to wait. And there we have it. There we can enter again. We enter then with a short trade right on this one here. We set stop loss. Here you can see we just set it above and we take 3 times down. And this would actually be an ongoing trade. Let me see. There. Some way we could say that we could actually enter here also with a long trade, because this was a valid. So in some way we would actually have a losing trade here, but we did re-enter right away with a short trade. So we have an active short trade, but we would have lost with a long trade here, because we would have set a long trade here. We would have set a stop loss right below the brown line, and we would set 3 times take profit. Just so there are no confusion, I will show you the losers also. But the thing is that we are making much more profit than losses. So just to take the examples I did show you just in the short timeline here, and you need to understand this is 1 day we are talking here now. Okay, so there we have let me see if we have more back here. No, we did take from here. So there we have, and now I'll calculate the same I did with the trend lines. There we have 3, because it's 3 times the loser, right? 3 times. There we have, here we would have a loss, because here we would have entered one more time. I can, just so there are no confusions, we would have entered here with a long. We would have set the stop loss right below like this, very tight, and we would take 3 times take profit. Yeah, by the way, it would be a loser. This would have been a loser. So we would have 3, then we are I did touch something here now, so come a little messy. We did open another pair. Okay, let's go back here. Let's zoom in. Let's zoom in. Let's zoom in. Sorry for that. I did enter our last session. So yeah, again, 3, then we'll be down to 2, then we'll be up to 5, then we'll be down to 4, and we have 1 ongoing. So worst case scenario, we would have a 3. So still it's profit. And now this is a trading in a 1 day. Only 1 day we are trading now. So the thing is that you can make so much profit within 1 day. If you want to trade a little more long term, you can just change for 1 hour, 4 hours. This would work on any time frame. You can even take this down to 5 minutes if you feel for that. Of course, the stop losses and take profit will be much smaller, but this works on any time frame to trade like this. I hope you found this interesting. And next video, I think I will talk about MACD, how to trade with MACD. So with that, have a perfect day for now. Hey, and welcome. In this video, I will show you how you can trade with Dogecoin channel. With Dogecoin channel, we will also, like the MACD, we will use 200 moving average. So let's add the 2 indicators we need for this example. You only need to search for DC. Then you can see here, right there. That's the one we're going to use. Dogecoin channel. And we need moving average and this one. There, then we have everything we need. We then need to make this one to 200. And I think I will change the color as we have a blue Dogecoin channel from before. So let's change this to yellow. Then I made a little thicker there, just so it's more easy to see. So same rule as with the MACD. If we are above the 200 moving average, that means the candlesticks are above 200 moving average, we only will go for buy trades. And the same if we are below, we only go for sell trades. This strategy is even easier than MACD. So this is the most beginner-friendly strategy that you can start with today. And it's also like MACD, is a profitable strategy. So let's see if we can find a trade. Let's go a little back in time. So let's take 3. 1, 2, and 3. Okay. So here we have a trade actually. So how this works? This is a trend following strategy. Okay. So we are only going to take trades when it's a trend. We are following the trend basically. So when you see like here, for example, we get a lower low, right? There you can see we had a line and we got one that is lower. That's a short trade. And here, the good thing with Dogecoin channel is no question of where to put the stop loss or nothing. It's so simple to use. So here, for example, we take this one, we take a short position right here. Stop loss we put on the top here and 1.5. As you see, this one will never be nothing with because it's too wide right here. You see? When it's super wide like this, then the stop loss become very big. But let's see how this turn out, by the way, for the future. Let's zoom out a little. Let's take this to 1 point. We're going to have it to 1.5. Let's drag it out. Let's drag it out. Okay. So this trade you can see go over 1, 2, 3 days at least. Let's take it more down. We are going to have 1.5. So you can see this trade will take a little while. But there, we did hit take profit. And like I said, here is no question about where to put stop loss. You always take stop loss in the another side. The top bar if it's a short and the bottom bar if it's a long trade. So you never can put the stop loss wrong. So it's very easy. That's why I told you from the start, this is the most easy strategy to take. So, by the way, that's a winner. Here we have one more trade. Let's just remove this one so we see easier. Here is a new one. Let's see. Right about here. Here you can see the line, and then we get a lower low there, right? Because if you have a flat line and you get a lower one, that's a trade. So then let's go in with a short position on this one, and like the other one, we set stop loss in the there. Don't need to put it above like I did now, just a little. So if touch, because this is more like a support line, right? And a resistance line, I mean. So put a little above, and then we put 1.5 is 1.53, and you see we have a take profit. Then let's see if we can find a losing trade. Right about here we can see we got one that is a little lower, do you see? So let's take a short position on this one here. Let's move me a little to the side. We put the same way, stop loss above there, about this, and I don't even need to take 1.5 because here you see that's a loss. So also you can see that I'm not only going to show you winners, that there are losers, of course, also. So now let's take a winner again. So now you can see here we are above the 200 moving average. We got a higher high there. So we take then a long position on this one right there. We take the stop loss right below. So here you can see that we take it below the lowest line, right? And then we are going to take 1.5. Let's move this one out of the way. 1.5 is around there, and it's a winner, as you see. And then we wait a little. You see here nothing happening because we are above. Now we are looking for only buy trades. Here's a good one. Here you see we got a higher high right there. So let's enter with a trade on this one, and we enter on this one. We set then stop loss right below the low line here, right? We go for 1.5 there, and it's a winner. Let's go more. Now we need to wait. Here it happens again. This would be a loser, by the way, I see right away, but we are going to take it. There we got a higher high, we are above. Then we take the trade here, and we put the stop loss right below, and you see we lost. So we got a losing trade. Then we need to have a little patience again, and because we need to wait till we come down, and then we go again here. Because I always, when I have taken a trade, I wait till we go below the middle line, we go down, relax a little, and we go up again. So a new trade would occur here. Let's remove this one. This will be a winner, but let's take it. We have a higher high here. We take a stop loss right below. We go 1.5 up, and it's a winner. Then let's find one more trade. The same I talked about. We can't trade nothing more here. We need to cross the middle line, relax a little. Like you see here, we're relaxing a little. We go below the brown line. We go down, the market relax a little, and we get a higher high here, and that will be a losing trade. So just so you see, this trading strategy right here gives around 57% win rate. But it's so easy to use, you earn 1.5 times the losers. So even with 50%, you would make money. Sorry for this barking dog, I have annoying neighbors. So let's go more back to see if we can find one more example. Yes, right here. You can see we here crossed, we are above. We take a trade right on this one here. We take a stop loss right below the low line here. And we go 1.5 up. And as you see, it's a winner. So that's basically how you can trade Dow channel together with moving average 200. It's a very beginner friendly, easy strategy. You never need to think about where to put the stop loss because you already have a set stop loss and set take profit. So it's no way you can do this wrong. So this is the most easy way to trade Forex and start today. So with that, have a perfect day. Hey and welcome. In this video we are going to be using MACD for trading, and we will also use moving average. So let's add that to the chart. To add things in TradingView, because I use TradingView to show my strategies, and it's also easy to see trades. So it's something you can use together with MetaTrader if you feel for it. Of course you can add MACD in MetaTrader also, but somehow I like to use TradingView. So let's go to indicator. Then we move me back down here. So we go to indicator. We are going to add MACD. MACD. Then we just add, let's see. We just want a normal MACD here. MACD crossover. That's okay. We can use that one. And we want to use moving average. Moving average. And there we have an updated one. So let's take that one. And then we start to have something here. Let's take this one. You go to this, you push this gearbox, you see there? And we go to input. In the length we put to 200. I think it's like, okay, we don't need to mark it too much. So how we are going to trade now? Now it's like this. As long as we are above, by the way, we are on 30 minutes. This strategy also you can use on any time frame above 15 minutes. If you take less than 15 minutes, you will have much more losing trades. Okay. Let's see if I can change this one a little also, just so we see a little better. Let's see. I want this one. Let's take this one to be white. Yes, much better. Okay. The reason, I will come back to that, the reason I did mark this one with white there. So as long as we are above the 200 moving average with the candlesticks, we are only looking for buy trades. Okay. So a buy trade is when you see this blue line down there is crossing the red one up. That means exactly here. That would be a buy trade. So let's do that here now. Will not be a concluding trade, but we take it. And the stop loss we put below the start of the trend. So around there. And here we are going to take 1.5 of the stop loss. So the take profit in this case we will take there. So this will be an ongoing trade. This is just to show you a trade right now that could have been taken. But let's go back in the history. As you see, we are above another thing that is very important, I forgot to say, the reason for this white line. We are only taking trades if the cross, like here, the cross occurred below the white line. If it's above, we don't take it. Like for example here, the trade was good, would be a winner, but we don't take it because we only take trades if you are below the 50 line. Okay, so but we would have taken this trade here. That means we would enter the trade right here. So let's take a long position right here. Stop loss we would take comfortable a little below, little difficult to put. We will take it there, and 1.5. Let's see, around there. That would be a winner, as you see. So there we have a winner. This one is ongoing. Let's go back to see if we find more trades. We can see here we are above the 200 moving. You can see here, right there, that we are crossing below here. So let's take this trade also. We go then with a long position. We would enter here. We would put a stop loss right below this you can see the start of the trend, right? And we will take it 1.5 and would be a winner. Let's see if we can find a trade that where we are below. So now we are in another way. We cross here. I would not take it because we are not below the 200. Here, that's okay. Here we can see we are crossing below our white line there. Do you see? And we cross down. So here we would have taken a short position. We would have taken it on this bar right here. We would set our stop loss right there, and we would take a take profit on 1.5 around there, and that would be a winner. Let's see if we can find a loser also, because that's always good. Here we are crossing down, we are below. That will be here. Let me see. Right here we are exactly on line. I would have taken that trade, but that would have been a winner also. We can mark it up just so you see. So you see many examples. Here we are crossing down. We would enter the trade here, a short position. We would enter stop loss right here, and 1.5. Would that be a winner? Let me see. Yes, that was a winner also actually. So not a loser yet. Here you see, for example, this is not a long trade because you can see we are below the 200 moving average, the blue line you see. We need to be, the bars here, the candlesticks, they need to be above the 200 movings to take a trade. So that's not a trade for us. Like for example, like you see here, we are crossing down, but we are above, so we are only looking for buy trades. So let's go more. Here now we are clearly below. Let's see if this one will be a winner. Okay, so here now we are looking for sell trades because you can see we are below the 200 moving average. Basically I'm trying to find a loser, but till now we have only one. So here we are taking a short trade that will be on, let me see, the crossing occurred here, but I think we would only enter here. So let's see, the stop loss we would set comfortable above the trend. Let me see, a little more. I want it there, around there, and we take 1.5, and here that would be a losing trade. Of course I could have set I think, let me see now. the stop loss is maybe a little wrong. Let me see. There. No, it's still ongoing. Because I would take the stop loss a little above this line there. This one could have been a stop loss taken, because it's easy to see now that I can move it a little more. So we can call this the first loser, even though maybe it would be a winner. Or maybe not. Let's see now. Let's take 1.5 just to make sure. Let's move it. Yeah, it would if we have moved the stop loss correctly, it could be a winner exactly down there. But also this one you could have lost on. So it's just to see that it's important how you put the stop loss. But yes, this one was close. This one was close. Just to see that you can lose also with any strategy. It's not, nothing is only winners. So now let's see if we can find another trade. Here we have a trade. Here you can see we are crossing down. We are below the 200 moving, so we are looking for short trade. We are crossing down above our middle line we see here. So that means we're taking a short trade. The short trade we will put exactly on this bar here. The stop loss we will set there, and we are going for 1.5. We see already that 175 would give a winner. So that's basically how you trade MACD together with 200 moving average. Average, if you are trading this and you do 1,000 trades, your win rate should be around close to 60%. And as you have 1.5 times 1, that means even if you had a 50% win rate, you would make money with this strategy. So this is a very profitable strategy that you can start to use today. That is super simple. You can see my other videos about trend lines. You can see my videos about support resistance, how to trade that. Can be a little more advanced. So this is a more simple way you can start trading today and make money right away. So with that, I hope you did like it. Below the video, if you don't have a broker, you find a link to a very good broker with a very tight spread, because the spread is important. That can be the difference between your losing and winning trades. So on to the next one. Hey and welcome. In this video we are going to talk about support and resistance and how you can trade it and what you're going to look for. So with support and resistance, the way I trade at least, I always look at the 4 hour and then I mark up everything there. So let's see here now. We do like this. Let me see. We take horizontal line. So we can clearly see now from the market we are right now, you can see we are at 126,888. And we can see here, there, let's make it a little thicker. Let's see. Let's take it there. Okay. So here you can now see on the 4 hour that we have resistance zone there. Resistance zone means it's an area that before did hit many times. You can see here, for example, down there, did hit one time. The market did test this area, did go up again. Then you can see it once again here, with it hit, did go up again. And here, you can see, with it hit, go up again. Same again here. And there, first there we did break it and we fall down. Typically, when you trade like this, now as this was support area before, because support when it's below the candlestick bars. When it's above it, then support, below resistance. Now this one most certainly will go up, because when you break it, most of the time he will retest this area. So when this one come closer, what we do then, we go to a lower time frame, like 1 hour. You can see here now. What we want to see now is that we want to go up to this red line, or at least close to it, and you want to be like you see there now, that you come up to it and you see a red one. After the red one, that's an area where we want to take a short position. Then, so when this one now, let me see if I can put there. So when this one now come up very close to the red one, the red line you see there, that now is a resistance zone, and you see that you get a closed bar with a red, like you see there now. Let's say this was all the way up here. Then when come on the next bar, we open a short position. Short position means that we are saying that the price, the dollar will lose value compared with Japanese yen. And the stop loss we put at the last bar that it go down in the top of it. So in that way, if we look at me here now, we would open a trade there. No, not open, but we have a stop loss there, I mean. And we open on the bar that close with a red one when we have touched this red one. If never come up there, it's not a trade for me. We always are looking for these type of things when we are talking about support and resistance. Another way, we can see if we cannot find example. Let's see. Here you can see, for example, I will draw one more line here. Let's take, and we take a horizontal line. We put it there. Let's make this a green one, just to make it a little different. So here we have the same thing. You can see many times we hit this one, and then this area is a support. Then here become resistance, right? You can see we did hit many times again, but there we did break it. Then you can see on the next bar there, he did retest it, right? So what you want to do then is that you enter the trade. The trade, we would enter a buy trade there. Then we would set a stop loss, like down in this region here, a comfortable. I would even put it down here. So in the line you see me here now, I will put a stop loss there, and we put take profit like at least 2 times the stop loss. So the take profit would maybe be up around this region here. So we would basically, like I said, we would open on here. That would be the buy trade, because we open on the retest, close on the retest, because you can see there that he did go down, retest, and he did go up there. So that's basically how you trade support and resistance the correct way. So I hope you did like this, and to the next one. Hey and welcome. In this video I'm going to teach you how you can trade with trend lines, how you're going to set it up, and when to take trades. Okay, so first, this is dollar against Japanese yen. The reason I choose this one because it's a perfect one for trend trading, because it's always super trending with this one. So I'll show you. So what we do, first we need to indicate a trend. Often it's good to look at a higher time frame, like 4 hours, to make this. So indicate a trend you can do after 2 tops or bottoms. Okay, I'll show you. So we take a trend line. You find it in the left side over here. This is Trading View, by the way. It's a free. It's completely free for use. I have a free version also, by the way. So you take a trend. Then you take from the top, and then when you can see you have the next top, then you basically can put a trend line already. So you basically need first, you take the first all top. I like actually to put on the spikes, but you see what fits best so the trend line looks most correct. So this you can edit after you get a few more, we can say, tops. And then you can start to edit it so you get it so it fits best for the chart. But when you just have two, then you do like that, okay? So then we can start to drag it down. And there you can see, we try to hit as many tops as possible. So there you have it, right? So, how can you then trade this? Let me remove this. So, you can see now after this one already, you can predict that the market one time will hit here again, right? But the way we want to trade is not that way. There are two ways we can trade with a trend line, and both are incredible profitable. So I would, when I'm trading, I do both way of trading. So after you have seen this one there, this second one you see here, this one is confirmed, you see down, then you make the trend line, and you can just make a line down like you see I have done here now, right? Then next time you can see in this bar right there, when you see that you come up there once again, I will then put a short position, okay? Because then we are trading with the trend, okay? The stop loss we do like this. We take then, also I will put, if you see on my member page now, you will see the video about support and resistance. So in this case, we want to put a support line here now. So let's take a horizontal line here. We can see that this is a, let's make it a little, let's make it green, and a little wider. Let's make it at a 3, okay? Then what we want to do is we put a short position there, right? And the stop loss we put above this resistance zone you see up there. That was support before, now it's resistant. We put a little above, if you take my picture there now, I will put it in this line, a little above, just so if come a spike up, we don't get hit, okay? And then you take 2 times stop loss, take profit, compare with stop loss. The way we do that, let's see here now, let's see. Not this one. Here we have short position, we take that. We would enter with a short here. We would take stop loss around there, and we want the take profit to be 2 times. As you see here is 203, that's close enough. And you can see we would have hit and take profit there. Then let's already here we would hit it. Then we wait patiently. We can see here we are close enough that we can do it again. Then what we do, then we enter one more time with a short position. Let's say we enter there. We then take the stop loss at the place where we had the start of the last one, and we do 2 times again, and around there. And you can see we would even hit it on the next bar. You see? So 2 winners. Then we wait patiently again. We can see there once again, one more. Let move me a little up here. We then enter a new short position. we would enter here, and we take stop loss at the last area once again. We do 2 times, and as you can see, we did not hit our yet. So this one would be an ongoing trade, okay? But the reason we do 2 times is because we can ride the trend down all the way, and when we get a loser, we only lose 1 time. So we always will turn profit in a trendy market. And this market, we are not so trendy yet here. If you then go back here, let's zoom out, look this one. Just imagine how many times you can do this here, right? So here we basically did another way. Here we're looking for short trades. So then let's mark this one up. Let's go to 1 day. It's much more easy to look. Let's see. Let's take it on 4 hour. We indicate our take a trend line. You can see here that would be something like there. We can see that we have an area here. We did shoot up a little too much. I would still have entered with a trade, but let's not take another one that we're going to trade after. We take it here and we go up like this, okay? So then here we basically have indicated the trend, right? So then when we come back to this point, you know the deal, we take our first trade. We do like that, we go here. Now it's only long positions you're looking for. So the first is this area, but it's first here we can take our first trade. So we go here, we take our stop loss around here. And no, it's 3 times, that's too much. We only want 2. And there, first take profit is hit. Then next trade, we will take, next time we hit, that is here. We enter our trade on this one. We take stop loss at here. And we take 2 times. Let me see. 2 times, it's around there. And once again we get 1 more trade. Here we take a long position. Here we take, we don't need to go so far down for our stop loss. This one we might actually have lost on because I would have taken a stop loss a little, yeah, maybe not, because we would then see on the next area, that would be, if you take here now, let's take a horizontal line, because we take the stop loss, we look after the last support and resistance, okay? So in this case, we can see that we have an area right about here. Let's make this one red. So I would actually, in this case, take my stop loss down a little below here. And then we want to go 2 times up. Let's see if that would hit. That would actually have hit. And this one here, you can see the reason for this one. Let's take a horizontal line here also. Here is an area, little below. This one maybe would have taken a little more, to be quite frankly, because we take a support and it's there, you see. So always a little below the last area. So always mark up your support and resistance, and take always the stop loss a little below, because if by the way the market chooses to go down below, then it's a trend change. So, but I will not only show you winners. Here would be basically our first loser. We would have entered a long trade once again here. We would have entered on this bar here. We would have take a stop loss around here, and our take profit would be up here. As you can see, if you drag this a little more, there. So I will zoom in a little so you see better. As you see here now, this one would be our first loser. But that does not matter that much, because you can see already we would have 1, 2, 3 winners. And one of these winners can support 2 losers. So basically say 2, 4, 6, right? And you lose 1, so that means we still have 5, if that makes sense for you, because it's 2 times the stop loss. So in that way you are making 5, right? So we make 5. If you had 1-to-1, it's like we have won 5 trades with 0 losses with this trade just here right now. And the same case here, we would have take a loss here. We indicated a new trend that now is a downtrend on dollar against Japanese yen. We would then enter here, winner, winner, and we have 1 ongoing trade right there. So we already have 2 winners, that means 4. So even if this one is a loser, we still end up with 3. So you can see the powerful, if you just trade like this, you are in plus all the time. But of course, you need to choose pairs that is trending. Trending pairs is basically Japanese yen, GBP, UK GBP. That's a trending. Dollar is not often so trending, but it's trending because it's with Japanese yen. So indicate, go to pairs that is really trending, like this is a trending pair. And if you trade only with trend lines, and you trade the way I have shown you here now, you will end up with a profitable strategy where we have set take profit and set stop loss. Then you never will have an account in any time or moment that will be smaller. You will always grow account, and you can start to put higher and higher lot sizes when you start to trade like this. So this is one of the most powerful ways you can trade with Forex. So I hope you found this interesting. Also, if you don't have a broker by now, you find a link below the video. It's the best broker you can use for Forex trading. So with that, I hope you did enjoy. There will be many more videos to see. So have a perfect day.